Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elonin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. How we doing? Happy Tuesday. Welcome to PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you today. Well, if you were like me and you thought, man, the bar is so low on for Zoom, how could they possibly go lower? Well, you were wrong. Zoom earnings out last night. Numbers actually weren't that terrible, but it's the same thing as we've seen from Netflix and Roku and Etsy and all these companies that benefited from the pandemic. It's the same exact thing. We'll talk about that. We'll talk about payment for order flow. We won't get too into the weeds of things, but Gary Gensler sort of made waves yesterday with his comments to Barron's about banning payment for order flow. So we'll talk about that, the implications of that. We had an index rebalance announcement overnight. S&P mid-cap 400, a few stocks going in there. The ads are trading up this morning. We'll talk about those as well. We'll take questions from our chat as always. We try to do that. Smash the like button. And Joel, how are we doing this morning?
We're a little bit in the red. We're 20 handles off the high of 42.25, trading just off the low at 45.21. We'll see what happens. It unchanged this morning at 25.25. That's our all-time closing high. Crude repelling off the $69-70 area, down 74 cents at 68.48. Gold climbing. Gold up 290 at 16.15.10. I don't know if you guys caught the news, but Palantir bought a boatload of gold. We can maybe talk about that. It's kind of like MicroStrategy buying Bitcoin. You have silver over $24, up 12.9 cents at 24.13. Bitcoin, just a little bit of a trading range here. 47,500 to 49,500. We're down $610 at 48,155. Ethereum futures, they're going the opposite way in a big way, up 2.67%, $90 at 34.
Has it made a new high on the move? Is Ethereum making a new high on the move?
It did make a new high on the move.
Nice. I like that.
Yes.
Long Ethereum. I like that.
Yeah, and Ethereum's been the leader.
That's why I traded in my Bitcoin for Ethereum.
You're just a Bitcoin trader.
I had a little bit of Bitcoin, but I traded most of my Bitcoin in for Ethereum.
All right, Dennis.
Even in my kids' RESP, the education retirement, or whatever you call it, registered education thing that they have in Ontario. I traded that in. I traded all their Bitcoin in for Ethereum.
All right, Dennis.
Kids only own Ethereum.
There's a rumor on the street. Or Spencer, did you say something else about Bitcoin? There's a rumor on the street. Did Gary Gensler consulted with Dennis Dick? I'm getting rid of the payment for order flow. That you gave him an entire 42-page plan on how to get rid of payment for order.
I sent them that in 2016, but nobody listened in 2016. Maybe I should resend it now. Yes, I met with the regulators back in 2016 on payment for order flow, and I gave examples on how the market could benefit without payment for order flow. Was met with I think the regulators, they all listened, but there was a lot of other people on the other side of this argument that are obviously benefiting from these relationships, including Charles Schwab, that had a few choice words to say to me in the live panel. But in any regard here, yes, Gensler did say yesterday that
not Charles himself, Joel. I don't think that would be fun. He asked if Charles himself was there. Charles Schwab.
Oh yes, no, Charles wasn't there. I didn't talk to Chuck.
He didn't talk to Chuck.
We are full of puns here today. You ever want to read it? I could actually put it in the chat. I have it wasn't 42 pages, but it was probably a dozen pages on payment for order flow.
Before you move too far off it, can I just say I did buy a third of crypto yesterday. Spur of the moment, spontaneous thing. I bought Solana, SOL.
I've been wanting to buy that Solana.
Yeah,
that Cardano.
Every day I see another person talking up Solana. I thought, all right, $500. Here we go. So I'm all in. I'm all in $500 of Solana. Anyway, okay.
That $500 could eventually be worth $5 million. You never know. Unlimited upside.
Who are you to say it won't be?
You never know.
Yeah.
You never know anything.
Yeah. Okay. Robinhood, payment for order flow.
Tell us what happened yesterday.
Gary Gensler was speaking to Barron's. Honestly, I can't remember the last time Barron's made waves like this, but Gensler speaking to Barron's and said, yes, it is on the table. Banning payment for order flow is on the table. Talked about the conflict of interest. We know about all that. We know about the conflict of interest. We know about it's certainly not, in many ways, it's not a good system. But we've heard this kind of thing before, and we've talked about this before. And I think you both are in agreement as far as what we want to happen versus what will actually happen or not happen. There is what you want and there's practicality, right? And I think you're both coming at this from a practical standpoint.
I don't think you're going to see a ban on payment for order flow. Would the markets benefit from it? In the short term, liquidity would be an issue. You'd have to get, obviously, market makers to come in, and this is so basically the whole. If you just want to really simplify it, what's payment for order flow? How does it really work? So you've got a brokerage like Robinhood that can offer free commissions because of payment for order flow. So there is literally companies that will buy your orders. So you send an order, your order goes to what's called an off-exchange market maker, and they will look at your order. They pay for the privilege to get your order. So your order doesn't go to the exchange through Robinhood. It goes to a market maker, an over-the-counter market maker. They then look at your order and say, do we want to trade against your order or not? So they have first dibs. They're buying first dibs to trade against you. If they think you're on the wrong side of the market, they trade against you. If they think your order is informed, they just say, okay, no, pass. We don't want that one. They still pay for it, but they send it to the public market. That's basically how it works. They're paying for first dibs to trade against you. That's why there's such a huge business, and that's why there's so much conflict of interest in it. With that being said, this is why there is free commissions, because if you didn't have this, the brokerages would have a tough time making money. So do you want free commissions? You've got to give the off-exchange market maker the right to trade against you. So there is huge conflicts of interest, and there's huge implications for the overall market. And I've argued, especially in the small caps, that there is less liquidity in the small caps because market makers are doing everything off exchange. They don't have to post as tight markets on exchange. So what happens is, and Dave Lauer's argued this too, obviously, is that the spreads, especially in small caps, might be artificially wider because of these arrangements. So even though you think you're getting a better price, the spread, let's just say the stock was 25 bid to 25.10 ask, maybe it would be 25.05 to 25.08. That spread could be 5-6 cents tighter maybe on some of these small cap stocks. Now on the mega caps, they're all 1 penny spreads. They're thick. They got a high frequency market making. They got a lot of their stuff going on there. So all the argument is that Dave Lauer and I have argued for a decade now is that I believe in the small cap space that the markets would be tighter. You wouldn't have these really wide markets, and some small caps are very wide. And stocks like AMD and stocks like Bank of America, it's not as much of an issue. There's so much ETF arbitrage going on. There's so many other players in there. It's not as much of an issue. But in the small caps, it's definitely an issue. And I think a lot of the small caps would have tighter markets if it wasn't for, one, off-exchange market makers basically getting these first dibs and not having to post as tight a markets, because they don't have to post any market at all. They just can match the offer, come inside, give a little bit of price improvement. So the whole system is somewhat rigged in that way. But it's rigged, and it always has been rigged in different ways. But in this way, it allows free commissions. So that's the argument on the other side is, hey, if we didn't have payment for order flow, we probably can't give you free commission.
How long do they have to decide to fade it or pass it on?
Oh, it's done in milliseconds. It's done in milliseconds.
Okay.
There's not a human being thinking, let's analyze the SPY. Let's analyze. No, they basically, if you're sending a marketable order, for the most part, you're getting done. And it's usually going to be the off exchange. I think it's something like 95% of marketable orders are executed by off exchange market makers. What's that mean? If you're lifting the offer, hitting the bid, they're grabbing the spread. The whole thing, they want to make the spread. So if the spread on the stock is 10 cents and you're willing to take the offer, they'll sell to you at the ask, hoping that they can buy from another guy coming in to sell on the bid. That's the whole thing. It's all about the spread. It's not about anything. It's not about your information. It's about the spread. It's about being able to sell on the offer and buy on the bid without actually posting an offer or posting a bid. It's a pretty good edge. I'll tell you, it's a pretty good edge. They're paying for that edge, though.
Ivan asked, is the order book we see on ARCA and INET and all that thing, is that different than what, for the market makers? And you know the answer to that one.
Well, no, the order book's the same for everyone. I mean, the order books are the order books, but they don't even have to worry. They just have to use the order book for a reference price. And there has been arguments, and Dave Lauer has argued this, and, I have too, is that the public quote can lag a little bit. And they can actually, is an argument been made that, sometimes they're matching against lagging quotes. So maybe you're not getting the best price. It's done all in milliseconds. And you're talking about the SIP versus, the direct feeds. And are they, this is getting really complicated. Is it potentially they're matching you and doing you at a price that's worse based on the SIP? Some people have argued, yes, they're doing that. Other off-exchange market makers, absolutely not. They're saying we're not doing that. We're using the direct feeds to price those orders. And I'm not going to go in to say that they're trying to intentionally give you a worse price. I'm just saying they're in it for the spread. That's what you need to understand is the people who are, saying all these other things. No, they're in it for the spread. It's an efficient way to capture the spread. And the spread being the difference for newer traders, what the spread is the difference between the bid and the ask. So that's what market makers have always tried to be. That's the game, is always trying to make the spread. And now they can make it, through these arrangements in the last, 20 years. This Bernie Madoff started this. Thank Bernie Madoff. That's where
there used to be Madoff.
What's that?
When it used to an oldie,
and Joel used to be an off-exchange market maker too.
I mean, we used to
be talk a little bit about that.
500. I mean, Bill Big D made a comment that I remember when the NASDAQ spreads were 50 cents. I mean, all that was done by phone. 50 cents on some of these NASDAQ stocks. I mean, you could drive a truck through that spread, and then that phone rang, and, there's a lot of conversations that went on there. So it's, it has improved in some ways. There's other ways that it's not. But I remember when we used to post our trades on the Cincinnati Stock Exchange. And so I would be 500 up on, in every single stock. At every level, and you had to post a two-sided market in order to trade order flow, and it'd be New York, and then maybe it was even Boston, and then it'd be Cincy, and then it'd be MADF, and that was Madoff, and they were there, and they were the market makers, and they actually had bigger size than I think they were like 1,000 up at the time, which is just absolutely, absolutely. And that was a very profitable part of his operation. I mean, those other things, that went on, I can't comment.
Those other things being the Ponzi scheme.
But the bottom line is payment for order flow a great system? Absolutely not. I mean, are there conflict of interest? Hell yeah. Does it suck for some people? Yeah. But do you think we're going back to a world where everyone's paying commissions on everything? Hell no. No way.
And the argument's going to be from the off-exchange market makers that if you ban payment for order flow, we're going back to, regular commissions. There is arguments from Rosenblatt I've actually read that, it's so competitive now that we're not going to go back. Even if you ban payment for order flow, they're not going back to, to Robinhood isn't going to have to, just start charging.
Well, Robinhood never did commissions, but everyone else did, right?
So there is a good argument. And there's a couple brokerages people are asking. There's one in Canada doesn't allow payment for order flow. And neither does the UK. Canada is Wealthsimple that has zero commissions, and they don't have payment for order flow, but they make it on the spread. They have a lot of their customers trading U.S. stocks, the foreign exchange spread. They have a lot of their customers trading U.S. stocks, and they make it all in those foreign exchange transactions as people are coming in and buying U.S. stocks. They're getting them on the Forex. So that's where they're making it. I mean, a U.S.-based brokerage trading U.S. stocks isn't going to have that to make. So can they make it on interest? Can they make it on other things?
Right.
Some money elsewhere, but don't kid yourself. If they ban payment for order flow, Robinhood stock, their profits would drop substantially. So, I mean, it is a major risk. And if you look,
what else do they make money from?
This to the stocks.
What else do they make money from?
Well, invest, the
normal stuff.
Yeah, the interest on,
accounts,
cash. Right. And we do have
margin loans.
There's one company that I know of in the U.S., public is what it's called. They don't charge commissions and they don't do payment for order flow. So they make money on the interest on your cash, investing your cash, right? That's basically
interest
and margin loans and all that stuff. But
it's interesting. The whole thing is very interesting to me. This has been something, and everybody just thinks this has just happened. Payment for order flow was out in the early 2000s. And, when I started talking about 10 years ago, I started talking about this 10 years ago in the conflicts of interest. And Dave Lauer was right there. That's why I know Dave very well. We've talked to regulators. I've talked with Dave on the phone lots of times over the last decade. And, we're on the same page. I think that the efficiency of the market, and I think liquidity, and the one thing is the issue really payment for order flow, or is it that we're allowing people to have the first dibs? Because maybe get rid of payment for order flow, maybe they still route to these off exchange market makers. And we're not saying they actually give size improvement. So I'll give another argument on the other side is that, if there's 200 shares on the offer and you try to lift it for 1,000, a lot of times you'll get done for the whole 1,000. Not all the time, but sometimes they give size improvement too. So they're giving sometimes a little bit of price improvement where they give you a little bit better than the offer, a few fractions of a penny better, and sometimes they give size improvement. Does that make and justify them having the ability to not post a market, a lit market, like where you're actually putting your bids and your offers out there, and still being able to execute and being able to step ahead basically of the bid and the offer that's out there? That's what I've argued. I don't know if it does justify that.
Who's the guy he used
there's
to work
arguments
with?
on both sides here.
With Lauer, who was the guy that he used to? Is he still affiliated? Chris somebody or
Chris Nagy?
Chris Nagy.
Yeah,
Chris Nagy's great too. Chris Nagy knows.
Maybe we'll get Chris on. Let's get.
Yeah,
Chris
we
on.
had Chris on lots of times.
Yeah.
So we've had Chris on lots of times too. I mean, this conversation, some people find it very boring. I find it fascinating. And it has implications. And let's take it to the stocks because we haven't talked to any stocks yet.
Stop.
Robinhood is the one that is impacted the most by this. And don't kid yourself. There was, obviously PayPal. There was multiple headlines yesterday that were taking Robinhood stock. One that PayPal might get into the stock, but the big thing was Gensler coming out and saying banning payment for order flow is on the table because nobody would be hurt more by a ban from payment for order flow than Robinhood, at least some of these public companies. So, I mean, Robinhood direct hit yesterday. It gets hit hard. We can give you the technicals, but as we get more color on this situation about payment for order flow, that is going to dictate the movements for HOOD.
All right, and I'm going to look at this, and I'm going to look right on the chart instead of, you can get your indications from left, but you're taking out the low, you're taking out the 42, what's been the low from yesterday, 42.56. You're taking that out right now with a little bit of gusto, so that's going to be your resistance along with the close, but I just don't think you're like whooshing right down to this 37 level, 37.29. I think you're going to get some defense here. And I think it's just it's going to keep going down, and try and find the bottom. Like, there'll be some big bids at 40. Might take a day or two to get that. And I just think it's going to come down. It's going to make a little rounding bottom, hang out 40, 41. And then everyone's going to be like, oh yeah, that 37.29 is going to hold. They're going to lean on it. And then that's going to be the question. Could it hold that low and then turn back up? Or are we going to take that out and take out the IPO? Frankly, I think you're going to kind of see a little bit of a rounding bottom here. Trading lower right now, trading at the lows of the pre-market session. If I got to look at this 37.19 today, the first time, if I was short, heck yeah, I'd stick my neck out there. But it just kind of feels like it's going to be a slow leak on the way down.
The biggest issue here still is, for Robinhood too, is one, its valuation is not cheap either. So one, their business model is potentially under attack from the SEC chairman. Two, the stock valuation is not cheap. So, I mean, you have multiple factors happening here, which obviously makes it scary. But, from a technical base, we can do anything technically. I think you're right. What was the actual price, Spencer? The
38.
38?
Yeah.
Those prices always seem to come into play.
Yeah.
So I would say your natural, even though you don't see much on the chart there, I would say naturally, I would think 38 is going to be a bounce point for it. So I don't know if it's getting there in the next day or two, but obviously it's come way off from when everybody got too excited on August the 4th when it went limit up and hit the $85. I mean, that's off the table now, and at least for a long time. But I think 38's on the table.
And remember, the 38 was the IPO price and the opening price. It opened flat. It did not get that day one pop on the opening print, which is interesting. So anyway,
we're straight down here in the market. I mean,
I know I'm trying to like trade and trying to work out of a couple of arbitrage trades here, but anyway.
Yeah. Okay.
All right.
That's about Hood. Who else?
Virtue.
The brokers came off.
Virtue Financial gets hit to a certain extent. They're on the other side of this. Virtue Financial, obviously, is an off-exchange market maker. They're an on-exchange market maker too. So they get dinged because, if ban payment for order flow, does that mean you're not going to send as many orders to us? So we're not going to get the first dibs, problem happening. So that's why Virtue Financial was down yesterday.
And the brokerage firms too were down.
Yeah.
And you'd think Interactive Brokers, but IBKR has a whole nother business too. They don't get hit as hard because they obviously have, two businesses. One, they have the Interactive Brokers Lite, where they will, send their orders to off-exchange market maker and give you free commissions, but you can also pay for a commission. Or if you're professional, you don't have a choice. Yeah, if I have an IB account, I have to go IB Pro because I'm licensed, so I have no choice. I'd like to go IB Lite and have no commissions, but no, as a pro, I get to pay commissions, at least to Interactive Brokers.
Can we talk for a second? I know we just discussed this yesterday as well, but today is the end of the month. There's been a couple questions in chat about the significance of that.
It's always significant because you obviously have your portfolio managers that send out monthly reports. I mean, a lot of people watching their portfolios daily now, so it's not as significant as it used to be. But quarterly statements, there's monthly statements. So they often say, that sometimes some of the stronger stocks for the month can, and this is a quarter thing too, can show strength, and some of the weaker stocks can show weakness because portfolio managers want to show in their portfolios. They want to hold the ones that were doing well, and they don't want to hold the ones that were not doing well. So that's the old theory, the window dressing of the portfolio. All you need to know is there are some adjustments happening often at the end of the month, and you do get some more volatility sometimes into that close. So I'd expect, some more volatility. Sometimes there's some opportunities to maybe a stock moves, maybe it's a stock you wanted, and maybe it's a stock you wanted to sell, and you get an opportunity to sell a little bit higher. So there's just more opportunities often at the end of the month.
Also, there's some options that expire today too.
Yes. Don't forget that.
Yep. The options. So yeah, I mean, someone's got their pedal on the metal here. We're red. We're not nowhere near the intraday low here from yesterday, but now we're over 23 handles off that pre-market high, 42.25. That's looking pretty safe for right now. But Robinhood we covered. Do we want to cover any of these brokerage stocks, or do you want?
There aren't that many anymore. There's like two. there's Schwab.
What'd Schwab do?
And Schwab got hit.
They got hit too.
Yeah. There's Schwab and there's IBKR, and that's pretty.
Are we doing anything with Schwab anymore? Or TD Ameritrade?
We're always doing things.
Yeah. But no, these stocks got hit as well. I saw that the Schwab had a nice double top in there. They sold off. It's bouncing. Better get back over 74 here. It's currently trading 73.85. That's right near all-time highs. And then this could have a negative impact. Morgan Stanley bought E-Trade. Ooh, look at that bunching up there.
Yep.
Ooh, keep an eye on Morgan Stanley here. Wow. Ooh, 3 matching range days. 103.68. Ooh, boy, that's tight. Keep an eye out on that. Break out above 106 or break down below 103.50. Keep an eye on Morgan Stanley.
All right. Should we go to Zoom?
Yeah.
Zoom.
Okay. I was wrong into this one yesterday on the At the Close show with Joel. I hypothesized that the bar is so low, right? Everyone else has already came out and warned, right? And by everyone else,
Peloton.
I mean Peloton, I mean Etsy, I mean Pinterest, Roku, Netflix, right? All these stay-at-home stocks, they all already warned. We all know Zoom's gonna do the same thing. Surely the market knows this. surely I was wrong.
Doesn't price anything in. It's the
is-
market that doesn't price things in to a certain extent.
Right, exactly. So the numbers themselves actually weren't terrible, right? Their earnings per share for last quarter was above estimates. Their sales for last quarter was above estimates. Their guidance for the current quarter actually was like more or less in line, and their guidance for the rest of the year was actually a little bit above estimates. In any case, they said the same thing everyone else did.
Yeah, they did.
And that's all it took.
They said this basically. I said they got Pelotoned because this was the same report as Peloton. We know Peloton got whacked on their report. They're getting Pelotoned more, so maybe we should say Peloton got zoomed, and it's a better verb. But we're down significantly. I mean, Zoom is now trading down 13%. Remember FIVN, the takeover, it moves percent for percent. So FIVN, if you're wondering why that is down, because Zoom is buying them on his all-stock deal, and they move directly correlated with it. There's a risk arb trade, obviously, there, and it's down 12% this morning. If you want the sympathy play, the pure sympathy play that hasn't reported yet is DocuSign. DocuSign is due to report Thursday night. It's down $7 because, again, when you think of, all those, businesses that everybody was doing, where we're going places, when now we're doing meetings instead. We're doing virtual meetings. We're not going to our gyms. We're exercising from home. Well, we're not going to the physical real estate office to sign. We sign with DocuSign. So that's why the relationship is there. DocuSign also seen as a stay-at-home play. These are pure stay-at-home stocks. I do think DocuSign, is just a wonderful business and what they do there. Again, valuation's an issue, and people are they do pair this up to a certain extent. So DocuSign's down $7 this morning because of Zoom,
and they report Thursday after the close.
Yep.
Just drill down on your daily lows from May. If you pick your poison here, 299, your May 19th low. That's where we're trading now, and then 292. And then you get to the low of the move, which we may see today, but 73.20 is the actual low of this move. And 2 days later, it had a low at 75.80, but down quite a bit. If you bought the 300 puts, probably not in the money yet, but I'm sure you got some improvement in price on there. Note the pre-market low, see if they try and bounce it. I'd say after this, my next bid would be at 290. If we can stay under this 299, I'd throw some bid out if I was short at 292.15, see if you can get hit. After that, it really drops off, and trading at the lows of the pre-market session. So not calling a pop yet in this. I'm sure we'll have one at some point during the session, but there you look at Zoom. Love the platform. I love the platform. I mean,
that was really smooth.
The platform.
Our webinar was excellent.
I know.
It was really good. I mean, the one downside was we had to do something for the international listeners because the paid Zoom platform was only allowing U.S. signups. So I don't know why that was the case.
That will change.
That'll change. We found that out afterwards. But I mean, the platform, when we did that webinar on the Saturday, was so smooth. It was awesome because people were asking questions and they pop up. So even and me and Rob are in there while you were doing your presentation, Joel, me and Rob are pecking off questions and they're popping up on the Zoom, and then we just can mark it, done, and we send it off and everybody's getting answers. I mean, it's a nice setup, the Zoom platform. I didn't like that the webinar obviously expired after a week. We have to figure that out too. And obviously, again, we've said we did tape it on our end. So if you signed up and you didn't, your recording expired on Saturday, a week later, we can send you the recording.
Let's give the bull case and bear case for Zoom quickly. The bull case is that their enterprise sales are steady, right? They're big, business clients steady,
okay.
Right? Still growing. They're more that plus the fact that it's down 50% since October. I mean, there's an argument to be made there, right? The bear side is. And someone just said this in the chat. Slow Black just said this. Everyone loves Zoom. Not so many are willing to pay for it. There's a lot of volatility for them on the low end of their customer base, right? The small businesses and individuals exactly who use it but maybe don't pay for it. And frankly, it's still an expensive stock on a price to sales basis or price.
They need something.
Really
they need something else. You know what I mean? They need something else.
It's trading 22 times sales.
Yeah, they need like I don't know. I heard like Zoom Phone or something like that. That replace But
they can't be the one-trick pony. They can't just
there
do
you go.
this. And
Well,
and I think they're smart enough that they will figure out some other businesses. I think that, so. But again, am I buying the dip on Zoom at $50 down? I mean, the valuation's still crazy and momentum's broke now. So you have no value investors touching it because it doesn't make any sense from a value investor play. And now you have the Momo guys saying, nah, you know what, momentum's broken. I'll wait till it starts to turn around. That's why you get these, when a Momo stocks, when these growth stocks, the growth starts to slow, that's where you can really see stocks get hammered because the growth guys get out, the Momo guys get out, and the value guys say, nah, it's still really expensive. I like it at maybe $150, but I don't like it at 300 still. So that's where, you have that gap that I always talk about when growth stocks growth slows. It can be a huge gap in price before you find the value investors to hold it up.
What's Kathy doing in this one? Has Kathy been
more?
I don't know. I don't know, actually.
I was going to say.
Maybe she sold. She did sell some too, I think, actually.
Also.
I don't know what she's doing. It's a good question.
I don't know.
Facebook, too. I mean, also, I think
know what she's doing.
I think it's
doing.
Oh,
no, we always know.
Sorry. Facebook is, I mean, it's not like there's, huge barriers to entry. I mean, Facebook has Facebook Live. One of my buddies I talked to think that what Zoom is doing with the paid events, Facebook is going to be doing that too. Instead of going to a football game and sitting on the 50-yard line and paying all those tickets and parking and having to fight for your seat. You sit in your living room and you put on your Oculus goggles and you're sitting at the 50-yard line.
Yeah.
And then you got to go to the bathroom and you don't have to wait in line and you got the food coming out of the kitchen nice and warm. So the future of sports.
I would just say I had a fantasy football draft last night and the question came up, do you guys want to do Google or Zoom? And we use Zoom. That's all I'm saying. Take that for what it's worth. Anyway, but they're not dumb. They're buying 5.9. They're not stupid, right? Like they're doing other things.
They're doing other things.
Yeah.
And you know what's smart? Because you're using stock to do it.
Yeah.
So I mean, you've always got to consider it's like AOL buying Time Warner. I mean, They use stock to do it. And that actually, in hindsight, turned around and saved AOL because the AOL businesses basically all died. Yeah. And then they had Time Warner. So then they were still good to go. So it's, that's the one thing is use that stock as currency. I mean, we talk about that all the time and, management should do that more often where you've got an inflated stock price. You should use that as currency. Like, should Tesla maybe be doing that? They have so much currency in their stock, such an inflated price that maybe they should be looking at buying other businesses. Maybe they should be buying some lithium companies, like here you are, you've got the electric vehicles. I mean, obviously, I said they should have bought Boston Dynamics from Google when, obviously Hyundai beat them to it. Actually, it was SoftBank that was in between, and the SoftBanks that sold it to Hyundai. But the stuff that they're doing at Boston Dynamics with the robotics that Tesla was hinting at, Boston Dynamics is already there on a lot of that stuff. I mean, they're way ahead. So, it would have been a cheap buy for them. So, Musk, if you're listening, I'd use your stock as currency and start buying. Maybe it depends where you want to go, I guess, with the businesses. But why not? Why not do small stock deals and buy Ford? I don't think he wants the whole unions, and I don't think that's what they don't want is that whole infrastructure that's built like that. But there is, lithium. There's a lot of different companies that Tesla could do. I mean, and that would help it out as well. So anyway, that's my thoughts.
So let's put Zoom in, not that they weren't already there, but let's put them in the group as with Peloton and to a lesser extent, even Amazon, right? And Netflix and Roku and Etsy and Pins, and let's watch them all together, right? Because they all spent this earnings season warning essentially.
Can I ask a question now? If these stay-at-home stocks are getting pounded, why are the reopening stocks getting pounded too?
Because McDonald's says they're going to close indoor dining. I don't know, Joel.
Did they?
They said I think they're thinking about it. Or no. They
I don't know. The market's at all-time highs. How is everything getting pounded?
I don't. That's
IWM's come back quite a bit too.
I mean,
there's not much getting pounded.
Okay. The stay-at-home stocks are going down more than the reopening stocks are going up. How's that? Is that
fair? But only those two. I mean, there's a lot of stay-at-home stocks that are still holding up very well. I mean, you could argue that Apple and Microsoft are stay-at-home stocks.
They're both.
They're everything. They win in all environments. That's
Man,
why
we are
those stocks are all-time highs and
continuing to
making
get
all-time highs every
pounded
day.
here.
Yeah.
Down. This is straight down. Dennis, are you sitting on a sell button that you don't know about or
Maybe.
something there?
It's a
What's
bad
going
algo
on?
just knocking it down here.
Yeah,
right now,
just
Joel.
knocking out the week here. We're down 8.5 handles here. Interday low from yesterday, that's on the radar, 1075. That was just above the high from Friday at 10 even.
At what point does it turn around and they buy the dip and we close green? That's the question.
You're not going to close green again.
10 o'clock.
You're not going green, Joel. We're down 9 handles. There's absolutely no way.
The 0 pit. Lunch
This
bet.
is just, but you make a good point. We didn't talk about that. The futures were up at one point here.
20 handle.
points.
Oh, yeah.
We're almost 30 handles off the highs. I know you only see us down 10. We were up 20 last night when we were all sleeping. I didn't realize that until Joel told me this morning because he watches the markets all night long for us, which is awesome.
All night long.
Thank you, Joel. But at 2:30 in the morning, apparently we were up 20 S&P points. I did not know that until I woke up, and Joel told me.
All right, let's can we do our second stock of the day here at 8:37?
Sure.
Third stock.
Sure.
We did it.
Okay, so I wanted to mention just as far as movers go, S&P announced some additions to the mid-cap 400 index last night. So APPS is going in. That's trading higher. Ligand, LGND going in, trading higher.
The ref.
Yep. And then PFGC also going in, also trading higher.
You always see these big S&P moves, and if you're an after-hours trader, they always happen typically at 5:15 Eastern. So if you see a sudden move up in like 3-4 stocks, and I always know it's like, oh, it's probably an S&P ad, and then you obviously see it a few seconds later. But the algos are really quick, so they're on 0 seconds. But if you want to know what time they do these, it's typically 5:15 Eastern.
Okay.
I don't have anything to say about these. I mean, they
Right.
go up, sometimes it's a good opportunity to sell. Stocks going to the S&P 500 actually sometimes can go down. When they go into the mid caps, they typically don't. So it's all about weightings. Are they going to a bigger weight in the S or into the mid cap, coming from a bigger weight to a smaller weight in the S&P? Those stocks can actually go down. We saw Penn Gaming. That was the absolute top the day, that got announced. It was going to the S&P. Was the absolute top at $142 and was straight down ever since. So they're not always events, where, they necessarily just keep running and running and running. In some cases, though, there can be some institutional money managers that need to buy or sell, and that can move price.
All right, here's another one that we discussed yesterday, and it got some love on the social media interwebs at Corsair. I know we talked about this yesterday, at least I believe it was yesterday, and
wow.
Yeah, I know. So watch out for Corsair today, everyone.
It's moving up here. So was Reddit got a hold of this thing again?
It's almost impossible to say who did what, but I'm pretty sure what happened is it got mentioned by a very prominent YouTuber, someone who's prominent in the AMC community.
It's amazing the influence that some of these social media platforms have.
Yeah,
I mean, last time Corsair got Reddited, I sold, the director sold, everybody sold because it was a ridiculous pop. I had my Corsair and I was like, I'd bought it at $40 and it was down to 32, and then it got, the positive mention on Reddit was trading up like 25 or 27% that June 14th day, and I was like, thank you very much for getting my money back. I'll take the out. I think these are usually selling opportunities more than buying opportunities is what I'll say. So in some cases they continue to go. But when your stocks get a big pops because it's getting mentioned on a social media platform, a lot of times those are opportunities to get out. I will say Corsair, $30 is huge resistance. I do like the company. I've talked about rebuying it for a number of times. I probably should at some point in time. I haven't yet, but I'm not going to be buying it today. It's up 5%.
Damien's saying it was already popping when it was mentioned. Maybe that's true, Damien. I don't entirely know. It's sort of impossible to nail it down exactly. So could be, but regardless, I don't really care why. I just care that it happened.
30, little bit of a roadblock. Nothing exactly at 30. Pre-market highs residing just under 30. Daily highs that I think may come into play today. 30.29. That was one high just above 30, and then another high at 30.99. So I'd rather be a seller in between those two levels than a buyer. Buyer in a pullback. I mean, if I felt like I had to own this day today, or I shorted it early, I try and get it back at the close. You don't want to see it go red after this kind of pumpage. 28.31 with the close. Major support down at 27. Put a quad bottom in there. before you embarked on this move. Big volume yesterday. Let's see if there's more. Well, I won't say suckers out there, but if there's more people here willing to push it higher.
I'm doing something that I haven't done for a while, and I'm just taking a quick look at the ratings calendar. See,
Yeah, well, that's not take a vacation.
Ratings calendar. What is that?
I'm just taking. We haven't done that.
No, I know. It's been like the market where, there hasn't been
Yeah.
that many interesting one. I did see Space.
Yes.
Got some love from Jeffries here this
Yes.
morning. That's what jumped out to me. I always take a look at the ratings calendar every day, so I'm just
Yeah.
checking. Space.
Creature.
Jeffries initiating, believe $33 price target, put a buy on it. That's why it's trading up 74 cents. Sometimes these stocks that are really in the gutter, and Space has definitely been in the gutter since the test flight, obviously top, we can call it. It's consolidated down here for a while. So now you're going to get it up and moving a little bit. Is there room to 30 on this? Yeah, it's a long ways away. I don't know. You probably, Joel, you're going to look at that top of 2704 first, right?
Yeah, we haven't even taken out 20. Highest we've been is 25.80, up 24 cents. So you always want to see, follow through the pre-market high, and you might be bet up here. It's not too far off that pre-market high, but next stopping point, your high from last Tuesday, 1 week high, 27, or last Wednesday, 27.04 would be a nice target. And after that, I don't see much after 27.04, but you're still a buck 80 away from that high. Always get to that pre-market high. I don't know if there's any paper in 26, but rounding bottom here, chance. Space has a chance. Maybe 25 will be the new 15. Remember when it came down to 15 all those times on the monthly and took off? But we'll see. It was definitely a fade. The after hours high on the day of the launch, 59.22. Uninitiated 2-for-1, over 2-for-1 stock split. So Jeffrey's combing the ditches here for a buy recommendation.
Daniel was asking about what the sales numbers are for Space. Last quarter, half a million.
They got some sales coming though, so it's
who's going?
Start to see some flights. Some sales are coming. They're still basically pre-revenue.
Yeah.
So, they have a little bit of revenue from a couple people. They're basically still pre-revenue.
To go up in Space for what, 7 minutes or something?
It wasn't even long enough. That was the problem. Here was the problem, and this is what I complained about that day. I'm like, I watched this, and so the flight was successful and cool, but I'm like, okay, the whole thing was like an hour, but they were just flying around, in normal, like an airplane style, and then they blast you off, and you're up there for like 2 minutes or less. It was like a minute. It felt like that they were actually in space, and then they just free fall from there. So I'm sure that 1 minute is awesome, but is that worth like $350,000 to enjoy 1 minute of free fall in outer space?
So
I thought it was like we were gonna like, it'd be cool if like you went around the whole Earth, for an hour and a half or something. And you got to take all kinds of pictures and stuff. 1 minute, I don't think is enough.
Okay,
and it turned me off of it.
All right, Dennis, what would you rather spend the money on, that or Ethereum Rock?
These NFTs. I mean, we got the Brady NFTs going, and you got the.
No. Answer the question: Space or Ethereum Rock?
Space. The Ethereum Rock is just ridiculous.
Okay.
I will say, like, the people who are paying these $1 million for this rock that was created in less than 10 seconds, it looks like, I think these people are going to lose a lot of their money. I don't know when. Maybe the person that buys $1 million is going to sell it next week for 1.3, 1.5, but this is a hot potato, and eventually somebody is going to get burned bad. So I will not be buying an Ethereum Rock. I will not be buying any of these NFTs. I think the whole thing is just ridiculous, to be honest. I get, some of it. I get some personalization aspects of it. I get, that, it's a collectible, but is it really a collectible? Like all these Brady NFTs, they're like, there's only 13 of this one. Until the next round next week.
Yeah.
So there's 13 of this one. Now there's 13 of this one. Now there's 20 of this one. Now there's 50 of this one. But they're all Brady and they're just different pictures. Are these really as rare as you want them to be? So people are going to get upset with that. But I mean, and some people are making a lot of money. And I think it's the people that are actually on the other side of the selling these things that are probably making a lot of money. But I mean, some people are like, I'll get the first one, I'll flip it next week, and I'll make myself $100,000. Or I'll make myself, and they're flipping and they're doing well. And some people are doing this. Eventually, this all ends ugly though, because I don't really buy the fact that all of these things are rare when you can simply just produce another one. Or this a rare rock? Who's coming out with the next amount of rare rocks? And it's a picture of a rock. It's $1 million. Think about $1 million. I know it doesn't buy as much as it used to, but that actually buys you a pretty decent house. Do you want a picture of a rock or do you want a house?
All right, here's the situation. Today and tomorrow I have to leave the show early because we have our Benzinga Crypto Trading Festival that I am hosting / moderating. That's after this show. We got Crypto Trading Festival pretty much all day. So no normal shows today. No one to close today.
No?
Today or tomorrow because we got Crypto
Did you
Trading.
tell me that? Did you send me a calendar invite for that?
I removed it from the calendar and alerted you, so you should have gotten the notification. Okay. So I have to go, guys. Mitch is gonna hop
You're
on.
leaving now?
I know.
You keep cutting out early on us.
I know. It's just they want me to host it, and I'm too nice, Dennis. I'm too nice.
Mitch, get Mitch in here. Mitch doesn't leave us early.
Mitch is already here. So
there's not enough room for the two of us.
All right.
This is really his plan. He's taking over. Mitch
Hey, Jason.
Spencer to leave.
You don't see the fingers going?
Just
goodbye, Spencer.
Just give me your parting gift and hit the like button. Thank you very much.
Actually, Spencer, you're going to get Raz coffee. Tell us the truth.
Yeah, he's a coffee guy.
He's
at
going
the
to go
office.
get hot coffee, and don't forget the sugar.
Hey, double cream on that. Let's get
sugar,
it.
One cream.
I used to be afraid of Joel back in the day. Anyway,
I think we all
I used to yell at you. I got to start yelling at you anymore. You guys, you kids in the office probably haven't been yelled at in a while. I'm gonna have to come down. Mitch is we're setting the official date. I'm coming in. I'm taking Mitch out to lunch.
Get ready.
Yeah, I'm gonna take you
the
to
heat.
a fancy place, man. I'm going downtown.
Let's do it. Let's get that
down there in my hazmat suit and everything.
Dennis owes me lunch, but I don't think he could cross the border.
What? I do remember there was a bet, wasn't there? I do owe you lunch, don't I? What was that one for? I believe I do.
Whatever way.
I think you want to bet.
I think it was SPCE
Joel loses every
too,
bet to me. Joel, you know what though is the cool thing is Joel owes me 100 lunches, so I'm just going to factor you at one of his. So Joel, you owe Mitch a lunch from me as well.
All right, I'm taking them out. I'm taking.
Yeah, you can knock off. So now you only owe me 99.
I just got to make sure it's still open. Anyways, all right, Mitch.
Guys, let's go ahead. Let's take some stocks from the chat now. I will let you guys know, throw some tickers up. Now, the first thing I want to kind of get into is I'm thinking that we finally start running into some seasonality in solar. What are you guys thinking about that?
Oh, you know what? I was looking at these solar stocks the other day, and there's some separation happening. You know, First Solar sitting right up near the highs, and then you got SunPower sitting right down near the lows. There's been separation in certain stocks. I own them both. Actually, no, I sold First Solar, I think. I still own the piece of SunPower, just a small piece that I bought at like $6 or $7, and I said I'd hold a little piece forever. It depends on the stock, I guess. Like TAN has been coming back here, and then TAN's obviously big SEDG, which has been making right close to the highs. ENPH is big component as well. So you're seeing separation in the individual companies. Canadian Solar, CSIQ got hammered, then it's coming back. I still like solar long term. I don't know the seasonality aspects of it. You meaning we're going to have less sun coming into the winter? Is that what what's the seasonality play?
I just look back at history, right? Historical perspective. Historical perspective gives us a move up between August and December. If you look at the yearly charts and the monthly charts, you look back, you'll see that they consistently come up during this time.
Have you been going to stock odds?
I know.
That's something Rob Friesen would be pointing out to us.
Yeah, little closet stock odds guy over there.
Well, one thing is I'm trying to do the best of 3 strategy here. So if I could learn a little bit of Rob, Dennis, and Joel, I will take it.
You'd be a beast.
I will take it. There's one thing that I've definitely learned is a little bit of relationship from Dennis, some technicals from Joel. And I mean, Rob does exactly what I like to do, which is and I've been told this. I like basket trading. Spencer told me one time, he was like, why do you do baskets? Why not just buy ETFs? I told him because I think I'm better than some ETFs. Reason why is I can adjust faster than they can. I can be active to the next basket. I can try to pick winners versus try to get, let's say, 40 stocks. I'm only trying to get like 5 of the names in that industry. Right now in solar, some of the ones that I have right now, Max N. I'm looking at Sol this morning.
I had that one for a bit, MAXN.
Yeah, I'm
What's
looking
at doing? That's consolidated, stabilized, starting to show some life.
I like the bottoming action there by 16s and 17s.
Yeah.
Now we just need to get up through the 20. If we can get up through the 20, I think this can get back towards the 200-day moving average, which would be up to 25.39.
I still like solar, so obviously the certain stocks have done better than other stocks here. I own a little bit of SunPower. I don't know which other ones I own. I own a couple anyways. I used to have this MAXN2. It had a ridiculous run. I rarely do this, Joel, but I had sold that MaxN, and I can't remember where, but I got the majority of the move. Usually I'm way out early, but I actually took some meat off that bone, so I did a good one on that. And I never got back in. I probably should. That's the one thing. It'll be higher, and I'll look at it back, 2 years from now. I was like, why did I ever sell that? But it's an art investing in, but if you're picking companies that you think got growth, I like the whole solar industry. I like all the companies.
All right, let's go ahead and I'll transition us to oil here. I'm seeing a lot of people talk about oil in the chat, and then we'll go to Baba. Yes, I said it, guys. We'll talk a little bit about Baba. Let's just first, you guys smash the like if you guys want to get to Baba. That's what I'll tell you. Get on up there to 500 likes today. That's our like goal. We're at 317. We need 200 more to get us up there to Baba. Who wants to see Baba? Hit that like. All right, let's talk a little bit of oil. What are you seeing out there, Joel? I know some people are talking about Gush, but that's a leverage trade. Just want to put that out there. Definitely more of a day trading vehicle, but I've traded this before. I like to use Gush and Drip, but it's definitely a more risky
Those are your leverage plays.
Yeah.
I was hoping this was going to hang out around 69 and a half, a little bit longer, maybe test 70. You've had some violent breaks here and rebounds, and this looks like you put that top in, and you've had another major rally off the low. So definitely leaning more towards the short side here in crude. These big vicious moves down, the rebound, lower high here on the rebound. So I don't know. I love that. I love to see it get back up into the 69 handle and fail. But to me, it looking toppy. So how it trades according to your ETFs and the USO. I'm leaning to the sell side here in crude.
I am too. I think you look at the USO and you think it didn't rally. One, it didn't rally on the hurricane at all, which isn't a good sign. Not that the hurricane maybe didn't do so much damage as some had feared. But I mean, you've got this snapback rally. USO got really sold hard there, and then 4 or 5 last days, it got a lot of the losses back. I think you got all kinds of resistance from 48 to 50. You got bag holders stuck here. Again, I'm just not a fan of oil long term, so there's always a bias there. But this is a snapback rally. I agree to be sold.
Exxon Mobil, you can see moving in sympathy with the crude, and I can remember this analyst rating, and you can mention it, Mitch. Someone upgrade. I think it was Raymond James. They upgraded this thing, and it was like 102 and a half, 103, and I was thinking, what the hell are they doing? I mean, I thought the chart looked horrible. Not horrible, but just these stocks had got back up close to their January 20 highs, and now we're tapering off, and crude's in the red. So nice little pop here. If you didn't get out of Chevron when it dipped under 94, couple highs in the same area. I think Warren did a little trade in this too. He bought it in like the high 80s and low 90s, and then he dumped some last quarter, which is pretty unusual for Warren. So that's what I'm looking at in those issues.
All right, let's see if we can get towards that 500 like goal. Now, what I'm going to bring up is
they don't like us.
I agree with you,
Mommy,
Joel.
they don't like us.
I'm going to be looking for some downside action. Actually,
every time you say that, like in the 3rd grade, you say, go ask Janie if she likes me, and then if
you wanna be my friend,
and then if the kid wanted to be, he'd go, you want to know if Janie likes you, and then you turn all red and punch the kid in the face, and,
and now it's all on cell phones.
Yeah, now,
everybody. Look,
Don't mess with Joel in the 3rd grade.
How do you get in a fight on Zoom?
You were always scrappy in school, weren't you, Joel?
No,
you're a little scrapper.
No.
I got in a fight in grade 3 That was the last like fight that I got in, I think, and all through grade school.
Guess
grade
what,
3.
guys? We actually
Yeah.
got a tip today. Blue collared lifestyle
$25.
likes
Okay,
us.
yeah. What
There
stock
you
you
What
go.
does he
We got
want? What's he
VRT.
want?
we get
We're
when
at
you
it.
pay $25 and you don't
VRT.
need likes, you get your stock immediately. But what was it? VRT and STEM.
Ooh, I haven't heard of that.
VRT new highs on the move. What's not to like when stocks are making new highs? Is this a new all-time high? I'm trying to go back. Yeah, I believe it is. So stocks making new all-time highs. Those are always fun to own because there's no overhead supply. There's no pain. There's no overhead. $30. Next logical stopping point for VRT. Maybe a little bit overbought, but I always like stocks making new all-time highs. STEM is a different story. This is a stock. It's got a little cup and handle forming, Joel, but it's forming the handle right around the old 25 resistance.
Yeah.
I'd say guilty until proven innocent here, though, because if you subscribe to the theory that old support becomes new resistance, we are getting resistance right where we had support back in July with that double bottom at 25, and now we're showing resistance there. Can it get up over 25? Can it take out the high from 3 days ago, 25.85? I want to see this thing over 26. So you're struggling where an area you would think you'd struggle. So right now, I can't predict which way. It's a coin flip on whether this is actually going to continue to move up or fail here at the old support line.
Well, it backed off too to close at 24.96, down 8 cents. So once again, to get at that seller, you're going to have to rally 60, 70 cents. It doesn't look like the average trading range is much above that, but Dennis identified the key levels. Next, if your target's just above that, then you're looking for a gap fill at 26.64. 7 up days in a row. Let's see. You haven't had 7 higher lows, but broke the winning streak. Oh, no, that was the other stock. Broke the winning streak yesterday, the 2-day winning streak. So high close of the move is right up there, 25.32. And then the other one, VIRT, 7
No,
day.
VRT.
VRT. I was close.
Wasn't Virtu. Virtu is obviously got hit yesterday on payment for order flow. We talked
7
about
up days in a row. 7 closes, higher closes in a row, 7 higher lows in a row. That streak won't last forever, but let's take out that 28.77 New York stock. Let's see, never been to 29, see if there's any stock there, but 7-day winning streak. So that won't go on forever. These situations, I kind of like to keep an eye on the low close for the move. And then if that's taken out, then then you're locking in some shekels there. But big run up. Next stopping point, first 28.77 and see if there's any paper at 29.
All right, we're going to go ahead and start wrapping up here. The
Sure.
crypto event is going to start at 9 a.m. Eastern, guys.
18 likes, we could do Baba.
Around. Now, we need the 18 likes to do Baba. You got that right, Dennis. We'll get towards that 500. You guys smash that like. Now, last thing I want to talk about is, and Joel, I'll let you and Dennis kind of talk about this. What are you guys thinking about the market today? It's looking like a little exhaustion. We've had some pushes up on the trends. If you look at the channels, the SPYs at the top of the channel, the Qs at the top of the channel, are you guys expecting some kind of pullback today?
We got a little pullback here. It's hard
That
to get bearish SPY because SPY is seen as defensive now. So it's like even when we have worries, they're like, oh, I'm safe in SPY. It's the market mentality that, if we're going to Apple and Microsoft and Amazon, even like Amazon's even been running lately, that we're safe. And that market mentality is hard to break. So SPY probably continues to grind higher. It's hard to be bearish. That IWM is a different story. We've come back a long ways in IWM. Some of the small caps had an ugly day yesterday. They're down slightly because they opened higher and they closed lower yesterday. So I'm more concerned in the small caps than I am with SPY.
All right.
We did get Baba. Can we do it quick?
Yeah, let's do Baba right quick.
Okay, so yesterday we liked Baba. I was like looking at it and saying that
and Friday.
if you were on to buy it, you could lean on the 152.80. Man, that would have worked well. I did not do it. I'm still long in the long-term account, but I didn't buy more. 158.23. Now it starts to rip higher here again. So the opportunity was the last 2 days to buy Baba. Now the train just left the station again. Can you chase it here? It hasn't paid to chase Baba for a long time, so I'm not chasing it.
It's kind of hard to talk about gap fills, just because it gaps every day because of the, kind of the secondary market. But if you're looking for more follow through, then you got to take, I see 2 levels, keep an eye on. First of all, pre-market high. Someone said, I'm out of 169 on this trade. I'm taking my 10, 12 points. And you backed off a buck and a half. If you're worried it won't get there, keep an eye on 168.45. That's your 3-day high. And it was another day where it made a lot. Oh, it actually put a double bottom in there. And then I was looking at that and I'm like, I think that might be higher tomorrow, but didn't do anything on it. If I did, I'd be waiting for that 168, 160, 168 and a half, 169. Stay tuned to my Twitter feed. Mitch, are you involved with this crypto thing?
Always. I'm not going to be there, but definitely, guys, stay tuned.
Because if I want to, I might do an at the close on my channel. You'll be around for
who
that?
knows? Who knows? Maybe I'll be around, guys.
All right, I'll check you down.
Around.
Okay,
Check out
I got to hop
PreMarket
over.
Plus.
Yeah, yep. I got to hop over, do the tickers we missed there, PreMarketPrep.com. I'll be over there momentarily, and I'll message you later, Mitch. Go get him, Triple D.
All right, Triple, I'll let you go. I normally let you talk, but I'm going to go ahead and jump us over to the cannabis event. Stay tuned, guys. We got some great guest speakers. Stick around. This will get you right over to that. If you want to learn everything crypto, today is the day. Smash the like, and I'll see you guys at the Benzinga Crypto Festival, guys. Stick around. We'll see you.